Times. This is the latest in a series of live webcasts offered by TraderPlanet.com through collaboration with well-known industry experts. Today is Thursday, January 28th. We're happy to have you with us today. I'm Darrell, and I'm your host for today's session with Darrell Jobman, a senior analyst for TraderPlanet.com. Today's webcast takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be archived on TraderPlanet.com, so you will be able to review the material at a later time. You can also find additional previously recorded webinars among our other free educational resources within our site at www.TraderPlanet.com. Our esteemed presenter, Darrell Jobman, trades his own personal account and has been involved in the financial markets for more than 40 years. A decorated Vietnam War veteran, he has served as the editor for several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and training courses on trading. And while his mission is helping others succeed by learning the do's and don'ts of trading, his editorial contributions to TraderPlanet.com have permitted him to amplify this passion. We're pleased to have him visiting with us today. Let's give a warm welcome to Darrell Jobman.
Thank you very much, Darrell, for that introduction for today's webinar on energy, which seems like an appropriate topic considering the fact that we've had cold weather, cool weather almost all across the country, one way or another, in the recent months. First thing I want to do, though, is to make an audio check to see if everybody can hear me okay. You notice that little man at the lower left. I notice some of you have already checked on it, but there is a little menu there, and there are several options. If you can hear me fine, click on I agree. If you got audio. Okay, we're getting some audio. It's always nice to know you're being heard when you put out some word. The second thing I want to do, I want to clear that, and then I want to kind of find out a little bit about the audience as to what particular interests them. So the question here is, I trade stocks, as simple as that. I trade stocks. I'm not talking about your long-term 401k holdings and so forth, but trading stocks. If that's you, say I agree. Okay? Right, now let's clear that out and find out, on the other hand, I trade futures. You agree with that? Click on I agree, I trade futures. Okay, looks like we have some stocks people, and that will fit our topic well for today because we're going to talk about energy, but we're going to not talk so much about just the supply, demand of oil and so forth, but we're going to look at some of the energy companies that are involved. First, I do need to make a couple of other comments here about our data supplier. CRB provides the data for the charts that I'm going to be showing you. They go back a long way, so they have some good reliable data. Also, if you'll notice in that lower left corner, there is a question and answer box there. So if you have questions, you can just ask them during the session. I'll try to get them at the end of the presentation. And when we do get to the charts, you may want to get full screen mode so you can see some of the details that I present as we go along the way. Now, when we looked at the energy situation in a webinar, it was about, I guess, 6 weeks or so ago, we showed these graphs, and they indicate that the world oil demand in 2010 is expected to pick up again after a down year in 2009 due to the economic weakness around the world. Now, based on these statistics and just looking at the numbers there, it looks like the world oil supply demand situation should get pretty well in balance this year as the economic recovery occurs, and it should bring things closer to normal. And I put normal in quotes because that, you have to take that for whatever it is. The thing that's seems to move prices the most erratically at least, are the stocks figures released by several sources each week. I don't know who the experts are who predict these pre-report estimates, but they frequently seem to be wrong, as in the news media reports that we got today, a larger than expected increase in gasoline and distillate stocks and unexpected decline in crude oil inventories, and they always go to an eye on. When we looked at the market, the crude oil market, you can see that we have a situation here where we have had quite a range in prices. If you look at the range that we have seen, it goes all the way from the highs that we had way back in the summer of 2008, the highs that were around $147 a barrel, if you'll recall, that we had at that point, right up in here where we had the big peak. Had the big valley down here, less than $35 a barrel. So we've had a lot of range within which the oil market has traded. The oil target probably still is, and the one that I have said for some time, is still in the vicinity of in the working on it, but we haven't gotten there yet. Now, the other thing that you have to look at when you look at anything related to energy, or for that matter, any of the commodities, is that you have to look at the impact of the value of the U.S. dollar on these prices. Now, here you can see the longer-term price action that we have seen in the U.S. dollar. Again, it has its peaks, it has its lows, another nice range. Lately we have been working on bouncing back from the low that you see here. So the oil market and the dollar market go together pretty well in an inverse relationship, kind of like cats and dogs maybe. There you can see a better picture of it when you put the two side by side, go back 1 year, and you can really see how negatively correlated oil prices and the value of the U.S. dollar are. When the dollar is moving up, oil prices tend to head lower. When the dollar weakens, as we see here, we had quite a stretch here where the dollar was clearly weakening and declining, then you have to be expecting the price of oil to go up. If you're a dollar bull, you have to be an oil bear, it seems like. If you are the other way around, you just kind of got to play the dollar, the opposite of the dollar and the oil, because they don't seem to mix that well. If you trade the energy market, remember the dollar is a market you always have to have in the back of your mind as to what's going to happen. Now, to be of any value to a trader, we have to bring all these big picture issues and these big long-term charts into focus and apply them to the current situation. And for that, I'm going to be turning to the indicators from Vantage Point Intermarket Analysis software. I need to make it clear at the start that I am not a salesman. I'm not selling this product. I'm not getting any money for the product sold, but I'm looking at some of the trading strategies and developing other ideas and so forth that I might be able to trade. And so I'm featuring those products that seem to provide some clues as to what might happen, and Vantage Point happens to be one of those.